Today, I'll primarily be talking about kind of our company's hypothesis on the intelligence labor revolution, but this is more or less in line with people in our field within AI, folks that are building these foundation models think. That being said, I'm not taking any moral stance on what's good and what's bad. I'm just outlining our prediction for what the future is. So very quick introduction about me. I spent 6 years, which is way too long, at FAIR, which is Facebook's research org. I was primarily focused on building out their multimodal foundation model stack. So I led all the pre-training efforts at Facebook. So you might have even used my models if you're into AI. Primarily focused on building these types of omni models. So if you guys like GPT-4o, we released one of the first open source versions of it maybe a year back. And then about 6 months ago, I left FAIR. Our whole team left FAIR in Seattle to start up this company. The company's in stealth, so I'm not going to be talking about the company that much. But we do have a couple of coworkers from USC, so thank you, I guess. And then, before that, I was at Microsoft, which is a rite of passage if you work in Seattle. Okay, maybe let's start by contextualizing where we are. I'll say that it's probably the first time in history that we now have some measurable and fixed cost unit of intelligence. This is just called a token. And if you go and you look at all the AIs, they're essentially priced by token generated and token inputted. And what this allows us to do is it allows us to have precise calculations of AI cognitive labor costs. And the general trend that we've been seeing, and these are actually real price numbers from the GPT series, is that unit of intelligence seems to be improving more or less linearly, while cost is also decreasing linearly. So essentially what we're seeing is exponential capabilities for some fixed dollar cost. And so if you contextualize that the market is now capable of working with these, we call them token economics, there's a very fundamental question of, what happens next with the market? And this is kind of what I want to talk about. So the first thing I want to start off by doing is discussing this meta point of intelligence arbitrage. And arbitrage is just a very fancy term in economics for a risk-free strategy that exploits price differences. Within AI, this is a risk-free strategy, more or less risk-free strategy that exploits price differences between AI intelligence and human intelligence, essentially for the same task or output. And the core economic mechanism that we work with here is by just delivering this intelligence at a very, very small fraction of the market rate while maintaining or exceeding the quality of which even the best of humans do it. And what we see right now is that there's this humongous gap because labor markets are pricing intelligence based off of historical scarcity, while AI is rapidly shifting the supply curve. And so the very meta arbitrage opportunity is that the first movers who identify very high value intelligence gaps are going to be the ones that capture extraordinary margins before this market adjusts. And so for the rest of the kind of presentation, I'm going to be talking about very specific places that there is this intelligence arbitrage that will be, I think, the kind of first order mover of markets for probably the next 10 years. The first place to start off is when you look at AI, there's kind of this two-speed economy. If you're building AI companies, the AI valuations are huge. Yet we kind of see more or less limited productivity gains. I think we're more or less on the margin of like 2 to 3% improvements as cited by some McKinsey study. So there's this relatively big expectation gap that we see, right? And I think this is fundamentally just derived from this productivity paradox, which is we have intelligence that is very, very cheap, but the implementation lags. There's high-level friction in order to get it into different subdomains of the market. Most subdomains of the market that are not technical have challenges measuring improvements, and the early gains have been primarily concentrated in tech already. That being said, kind of the equity markets always price things on like 15 to 20-year delays. So we see that there's kind of a humongous price separation between what VCs or what Silicon Valley thinks AI will do versus what the public markets think that it will do. And I'm, of course, very, very pro what AI will do. So I will say that there's a humongous arbitrage opportunity in positioning yourself in the kind of delta between the limited productivity and tomorrow's inevitable transformation. And these monetization strategies have been more or less driving private investment for the last couple of years. To kind of nail this point down a little bit further, the scale of opportunity here, like the total acquirable market, is essentially the size of all labor, which is kind of crazy to think about. I think if you look even now, I think nearly 40% of jobs have tasks that could be affected by AI. I have a citations page at the end of the slides, just didn't want to pollute this. But what we're seeing is that advanced economies especially are facing greater exposure. So if you look at OpenAI, they have a very explicit definition of AGI, right? So for them, AGI is this artificial general intelligence, is the ability to replace 50% of knowledge workers. So there's a humongous white-collar vulnerability that we're seeing where current AI is disrupting primarily high-skill cognitive tasks. And there's an economic value concentration too. So the very big exposed sectors are about $8 trillion in kind of the world value that has the ability to be severely impacted. And if you go and you read, I think Anthropic's, which is another kind of large language model company, their belief is that about 30% of knowledge work tasks will be automated in the next 5 years. So this is, again, on the orders of trillions of dollars of opportunity, which is why VCs have been primarily investing in AI for the last couple of years. So I'm going to start off with something that, doesn't sound too good, but I think it is the fundamental truth, which is this co-pilot thesis. And this was pushed around for quite a bit. Microsoft explicitly positioned itself in a way that AI will not replace human labor, but it's going to be a co-pilot for you. My take, and I think most people takes that are building these models, is that the current co-pilot era is a market entry strategy, not the end state of AI. And there's more or less this weird paradox that derives from this adoption psychology, which is that co-pilots make users feel safe. Users use co-pilots, and then every interaction is a way to automate the human in the end. And we kind of see this very clearly in domains like code. If you're using any of the new AI for code IDEs, it's very evident that this is what is happening. And so the question then is derived, what is the actual terminal condition of labor? So right now, I think we're seeing that most AI use cases, close to 60%, are in this co-pilot realm, while about 43% are in this automation realm. But this ratio is essentially inverting at a very predictable rate. So I think this came from IMF that was saying this is inverting at about 5% a year, but of course it's not a linear relationship. And so the general trend that I think we will see or are seeing now is that there is this co-pilot phase, which is that the AI augments human capabilities. It handles very basic things, but is not capable of really executing end-to-end in any fashion. We'll eventually move to this hybrid phase, which, again, if you use AI for code, you can ask it to create an app. It will kind of create an app for you. This is where the AI performs the primary work, and then you have a human that's essentially providing oversight. And then we'll slowly move into the automation phase where AI is handling most full workflows with minimal human supervision. I think like Tesla's self-driving is a great example of this. It works pretty well. It's driven billions of miles already. And the last case is this autonomous phase, which is the AI itself identifies needs, executes solutions, evaluates outcomes. I don't think that there's a market scenario yet, but I think this is very soon to come. And so from abusing economic terms, we can talk about what the reallocation curve will look like. And so there's this dynamic task frontier that we're constantly thinking about, which is there's a boundary between human and machine intelligence that is changing kind of on a month-to-month basis. And so you can take common economic concepts and apply them here, which is, there's a substitution effect, which is AI directly replaces human labor, complementary effect, which is just the co-pilots that we were talking about. And then what's more interesting is this reinstatement effect, which is that AI creates whole new monetization opportunities that previously just didn't exist before. The take for us is that, again, the co-pilot is this transitionary phase, which will increase human productivity in the short term, my guess personally is that this is about 2 to 5 years, and then there will be a massive substitution and reinstatement effect that happens maybe 5 years after, which is that the majority of capital, the majority of value will be derived not from humans but from AI. And again, this might sound crazy, but if you look at any common trajectories, this is primarily true. One kind of side note to think about, we've talked a lot about cognitive intelligence, which is, the ability to reason over language, the ability to manipulate complex symbols, be creative. This is essentially what the big labs are all working on. And this is why cognitive intelligence or white collar kind of work will be first to get commoditized. The marginal cost of essentially getting this type of intelligence is coming close to zero. It's already disrupting knowledge work with exponential capability and cost improvements, again, like almost month over month. And concurrently, there's a new wave that's starting up, which I guess started up since last year, which is this physical intelligence path. And this is the ability to understand the real world in near real time, be able to reason spatially. Robotics is the kind of embodied form of physical intelligence. And this is very, very early stage, but this represents, again, a large percentage of the labor market. So while I don't think we have anything there, and this is kind of what our company is building towards, there's a very forward-looking arbitrage opportunity that investors are now paying a lot of attention to. And I'm just really just nailing down the point here that we have billions or maybe even close to trillions of dollars that are flowing into AI, but physical intelligence remains significantly underinvested. So this opportunity is great where you have things like tasks are very high value and labor is very expensive. Like welding is a very good example of probably the first thing that will be automated in the physical world. There's very high integration costs. Hardware is very hard to do. There's technical barriers that allow you to create very defensible applications. And the physical world is kind of checking off all these boxes. And taking a step back, like I said, the majority of global labor is actually physical labor, while it's receiving a relatively small portion of AI investments. So our company is specifically focusing on this alternative path to AGI, which is through the physical route. So we kind of level set what things look like. It can rather be bleak or very happy, depending on how you interpret this. But if you're looking to make money or if you're looking to build a company, like what is the strategic playbook that you have? The very first one, and we've seen a lot from smaller companies. If you've heard of CoreWeave, if you've heard of Nebius, these are the plays that they're doing, which is that there's a gold rush and you want to be selling shovels. And so this is what the infrastructure play is. Infrastructure providers have very, very high margins, primarily NVIDIA with close to 90% margins. And there's kind of a 3-layer advantage that we can think of if you're building within this realm. You can start thinking about getting into specialized AI chips. There's already companies that are coming out here, very similar to how Bitcoin miners went from GPUs to ASICs. A very similar thing will happen here. There's no commoditization of hardware yet, so this is a humongous opportunity that if you're in the chip design kind of research area, this is a very, very good place to be. Then you get into compute access controls. So this is primarily, the big players have this. So cloud providers can gatekeep access to AI infrastructure. I think an example is like OpenAI can't sell to the government, but Azure can. So Azure resells OpenAI models because they have some custom deals with the government. And the last thing is energy efficiency. If we truly believe that these models will get commoditized, you're going to get down to whoever can get the cheapest energy at the end. There is more or less a strategic bottleneck. So when I was at Fair, this is public, but Meta had 400,000 GPUs, close to $10 billion capex to build. So there's extreme dependencies on the hardware chain. And yeah, as model usage grows, infrastructure dependencies will intensify. Models will get cheaper, but the paradox here is that they'll just be used more. So if you're in the chip world, building specialized infrastructure is a very good way to make a lot of money. you can probably get VC money very quickly. The other play is on the application layer. As models commoditize, kind of the only thing that you can really work with is if you have some proprietary data. And proprietary data is hard to come by these days. Kind of more or less the only places that you see really proprietary data is either medical, that has stuff like HIPAA that you just can't get past, or if you're a pharmaceutical company, you have large-scale wet labs that you're able to derive a ton of data from. But this is becoming slowly a harder and harder thing to do. It's no surprise that all of the language model companies train on everything. No one respects copyright. You train on whatever you can pull. So it's getting tougher and tougher to get a sustainable advantage with proprietary data. The next thing that you can do is think about how you can start building real-time data flywheels. So this is essentially, how can I get feedback from my users in a way that allows me to get really cool data that no one else can use. I think coding is probably the easiest place where you can do this. So if you're thinking about building an application layer AI company, I would say figure out a way that you can get some type of data moat where the big players can't get it. And this intelligence flywheels that are developed, which is this flywheel of you're able to get some type of data capture because your user interactions generate more and more data. You get more and more data, so your models improve, which is also supplementary to why copilots will essentially just automate tasks. From there, there's a very big network effect multiplier and winner-take-most dynamics that, because it's so easy to switch between different AI providers and different AI applications, that you will just attract better and better talent. And then you get a deeper moat, which allows you to continue on this cycle of data capture. So again, if you're thinking about building an application area, think about how can I design intelligent systems where every single transaction with the model gives me some data that the big players don't have. And this is kind of the last place that I'll talk about on the model front, which is that intelligence truly is getting commoditized. So whether you're OpenAI, whether you're Anthropic, whether you're our company, whether you're anyone that's building these models, base models will get commoditized because functionally they become very similar to like electricity or like water. They're very high volume plays at very low margins. But there's something that's very interesting here, which is that foundation model companies, the people that are building these core intelligence, they possess the talent and infrastructure based capabilities to essentially move into any vertical. They can choose when and where to compete. So it's very tough to think about places where you're not just going to butt heads with any of the big players. I think a really funny, or not funny, really interesting example was like in the 1800s when railroads were being built, right? There became a problem where there was more or less a monopoly on the railroads, and the railroad companies could essentially win in any market, right? If they wanted to move food around, well, they don't have to pay the high margins of per box cart, so they were able to win in the food market. They were able to win in the transportation market. Eventually, of course, this led to various antitrust cases. I think the very first antitrust case was a railroad company. But more or less, this is what it looks like for the foundation model companies as well. And this is what I also call the power law threat to application companies, which is that right now, at least what we see is that most applications of AI are following a very strict power law distribution. And when foundation model providers see that something like 40% of all their generated tokens are being sent to a single vertical, they're going to be facing very compelling economics to move upstream. I think a very good case study here is if we have anyone that codes here, if you use Cursor, for example, right? I think Cursor provides Anthropic with something like 35% of all their tokens generated. And 2 months ago, Anthropic released their own code gen tool, right? And so we'll see what happens to them. But the very strategic asymmetry that foundation model companies have makes it very tough to become a very big application layer company. So what you really want to be doing is you want to be building in the invisible long tail of specialized applications, something that big companies are not going to think about touching in the next couple of years. And this is essentially kind of what we call the investment barbell. And this is also the kind of big way that we think about the full market, which is that there's going to be an extreme bifurcation. So what you're going to either have is you're going to have foundational giants, so companies like OpenAI, which I think raised more than 18 billion recently. And you're going to have very specialized and nimble players. So I'm talking about companies that are less than 20 people that are able to get to 10 million recurring revenue a month. And there's already a couple of these types of companies. And what will happen is that this middle-sized companies that are undifferentiated, they're kind of too small to compete at the foundation model scale, and they're more or less too generic to defend against the specialized player. These companies will die. And kind of respectfully, I will not name any of these companies, but you can go and you can look at them. And really, I think what we've seen with AI is, these sub 10 people companies are able to get to $10 million a year with very few people in a very short time span. So if you're a developer, this is a great time to build something before your job slowly gets automated. Yeah. Again, the point is not to be bleak, it's to be honest, but more or less, this is what folks in our field think we're going towards. I now want to make a couple of macro predictions. And so let's probably talk about the biggest macro prediction, which is like what is happening to the core labor force. So this is more or less inevitable, but what you will see is there will be an unprecedented bifurcation of skill. It's going to probably create the sharpest division of labor since the Industrial Revolution. And there will become a new labor hierarchy that exists. So you will either be an intelligence director, which is someone that is capable of raising capital and using the underlying intelligence of these models to build something that can be monetized. You're either an intelligence verifier, which is you're verifying the generation of these models or verifying, I guess, primarily the generation of these models. This is rather stable, but again, if we think that the co-pilot thesis is transitionary, this will also go down to zero. And then the very unfortunate thing is the underlying people that produce the intelligence will essentially go down to zero. You're already kind of seeing this happen with the paralegal field, where there are companies like Harvey that are, cutting down paralegal departments by 95%. In the short term, of course, there's an opportunity, which is if you know how to use AI, you see very large wage premiums. And we'll likely see that there's a compounding inequality that happens here, which is the more capital you're able to gain, the kind of more capital you're able to extract out, because your personal intelligence is no longer any type of edge in the market. The really interesting, of course, opportunity here is to create intelligent empowerment platforms that are able to transform average workers into these directors. And there's a couple companies that do this. I think Replit's a great one. It allows people that don't know how to code to go and build websites for very specialized things. Like, this is a great way to empower people to use AI in effective ways. The next, I think, relatively big implication here is that there's going to be a geographic disparity. We're already seeing that AI capabilities are primarily concentrating in advanced economies. The number of countries that have any real type of foundation models is 2, maybe 3. And so we're going to see the same exact hierarchy that I described before on the micro level happening at the macro level, where you have nations that have foundation models. To be honest, it's primarily US and China right now. And then there will be countries that just, I guess, use these core intelligent foundation models. But thinking about the fact that your country is going to export out, kind of its core work to a model that exists in a different country is kind of crazy. So there's been a lot of efforts to try to build in regulatory moat, so-called sovereign AI plays, like Mistral has, France has one called Mistral, Japan has one called Sakana, but like I mentioned before, they're all middle-sized. They can't compete with any of the big people without regulatory capture. So either they die or the government just helps them out. So the arbitrage opportunity here, of course, is to create intelligent transfer mechanism between high production zones and high value application areas. And of course, there will be labor price differentials here as well. Kind of last point that I will talk about is that This is more or less starting to become a very firm belief of mine, which is that AI is going to primarily drive the next wave of science. Essentially, the key trend that we saw from 2018 to 2024 while we were working on foundation models was that if there exists a large collection of data for any problem, this is a problem that we can solve. So we solved writing, we solved basic reasoning, we solved easy code completion, we solved basic protein folding, we solved weather modeling. But a lot of the interesting problems that are on the frontier kind of effectively, by definition, will not have enough data. And so the current revolution in AI, if you've heard of like test time compute, is essentially we don't need a lot of data, we just need to be able to verify things well. So anything that can be verified after this year can effectively be solved. So math is verified because you can write computer proofs and have the computer tell you if the proof is correct. Biology, physics, chemistry can all be verified by very, very expensive simulations. And most of the breakthroughs, I think, will be happening because of AI in these fields. So now's a very good time to build against classic R&D industries who are not adopting AI, like material design and pharmaceutics. I think protein folding is a very popular one, where a couple of companies have come up and have been showing pretty cool advantages there. Yeah, this is more or else it for me. Again, the point is not to be bleak. You can take a very positive perspective on this and say that, what is it, like in Genesis, God says that labor is the punishment of the original sin. Maybe we're finally coming out of this, right? So, I think that's it for me. That's time for me. Thank you.